Hello, everybody. Dale Pinkert with TradeGateHub.com, powered, sponsored by TradeView Markets. Check them out. Trade everything there with competitive spreads. The big event of the week is the ECB. Haven't talked to you guys since last week. Talked about not adding to any metal positions until the yen peaked, and I thought that it's a monster. So it blew out all the divergences. I missed the long side. Fortunately, I didn't sell it because of all the blown out divergences. When you get this kind of action, even the 4-hour, once we started to break out, there's no divergence there. Besides just getting some type of correction, I really don't know what to do with it. I certainly wouldn't chase it up here. But let's talk about the euro, because last week I talked about that 99 support, and we did get some decent bounces last week. So here's the way I see it now going into the ECB. We have the potential for a 3 drive to a bottom formation, that the return line will come in right around 98.30. I know some people are talking 97.5. It's my view, it's not the strength, but it's my view that I would not be pressing the short side here. Here's a typical example of some of the internal strength, as bearish as everyone is. With 99 being solid support, we took it out last night during the holiday session, picked off all the stops, and traded right back above it. So now we have this trend line here. So a couple of things to watch for. First of all, we'll be looking for non-confirmations around 98.30. That means on multiple time frames. The RSI not trading under 30 like it did back here. That's your 4-hour. Here's your 2. We don't want to see the 2 take out the 30 either. And if you really want to dial down, you're really going to need something. The 15 minutes going to have to do something a little better. But I also want to point out what's happening on a weekly basis here. And this is purely technical. If you notice last week, while we were holding 99, we had what I call an inside week, which means the range was inside the prior week's range. And early this week, we're taking out those lows. The most bullish thing the market can do is take out these lows, last week's lows, which has been accomplished, and then take out last week's highs, which is par 80, which is 90 pips from here. And I'm talking maybe another 60 pips lower for this return line that I just showed. And then the other signal to look for by Friday, and I don't think unless we collapse, it's going to be difficult to achieve, would be for the euro to close above 99.63 by Friday to have a 2-week reversal. 2-week reversals are important to me because it's 2 weeks of market memory to the left. The dollar up strongly today, but when you look at the weekly, it's not ideal, but this would be the second lower RSI reading. It's above 70, I think 72 right now, but lower than here. But when you look at the daily and intraday, especially the 4-hour, we're about to make new highs for a 3rd drive up here. A number I have in mind is a 1.272 extension at 110.38, which is only another 40, 50 pips from here. Some people talking 111, 112, we'll see. But I think it is significant that although the yen has blown out all types of momentum divergences, the dollar has been unable to, just like the euro. So there you have the 4-hour, where another 40 points I don't think is going to take it for a close over 70. Look at the 2-hour, same type of scenario, especially if it doesn't stay there, if we get up there and get some type of reversal. So maybe another 50 points higher or so in the dollar index, potential short. And then again, this 98.30 level in euro. The Canadian dollar really is kind of weak here today, although we did, match recent highs up here. Pretty close, some people probably talking about a double top. And as strong as it looks when you go the weekly, maybe we have to go the monthly. With the dollar making new highs, Canada is still all the way down here. So commodity currencies, I think, are going to be short sells. I don't have anything right here on Canada. It looks like we should get maybe one more high here to clean out the stops over the double top. Similar situation in the Aussie. I have 78, it's actually an 88%, 88.6% level at 67.30. So I want to see what Aussie looks like down here. It's not that far away. And we'll see if, again, Dixie making new highs without the Aussie making new lows under 66.70, but that's only another 80 away. Something I do want to point out that could be developing here, and I want to show you something in silver. So silver, what's interesting about silver is that and it's doing this in the face of accelerating blow-off type yen, we took out the prior lows, which had divergence, which was a confirmed low. And the low that we had yesterday, which is kind of looking like a shakeout stop hunt, did not, it was a little under 30, but well above the lows that we had in July. And then what we have here is a falling wedge. We had a throw over or throw under. I had this wedge line drawn before we took it out to the downside. We're trading above it and threatened before this recent push up in the dollar a wedge breakout. So that doesn't look like that's going to happen today. We failed back up around this 1870 level, but I think there's potential for a higher low, maybe around this 1780 level if it continues to push lower, and you could risk the lows, which came in here about 1750. But the most important part I'm looking for, and it was working earlier, but it's the gold-silver ratio chart. So we're right around the 50% level of this big decline that we had when you could have gotten 125 ounces of silver for 1 ounce of gold. Not a bad deal here at 95, but what I'm looking for right here is the weekly, which I can count a 1, 2, 3, and see where we are now. It's pretty glaring divergence. We need a red candle, a reversal candle here for this to give us a trigger. And if that happens, then I think that's going to be another positive signal for silver if we do peak up here and put in a 3 drive to a top formation in this. The S&Ps are challenging the 61.8 level that we had at the 39.02 level. Under 39, I know that I've been talking about this for a while, that I have this trend line that's going to turn me bearish under 38.66. Talked about the market trading back down to 4,000 and then 3,900. Actually, in the room, pointed out 39.02, and some of the traders in our community on TradeGate Hub traded this. It turned out just to be a real good 24-hour trade, and we're challenging it again, and that's because of yields. So yields look like they want to make new highs. This is something that I didn't think was going to happen. It looks like we're going to do that, and this is one of the reasons we're getting negative action throughout the markets. It's all about the Fed, although this week more about the ECB than the Fed. But if we get above this high, 350, which looks very possible now, it most likely will not confirm and would look a lot like the gold-silver ratio with 2 lower RSI divergence readings. So there's a 10-year. Here's the TLT making new lows. Last Friday, I thought that we dug in our heels and we were going to head lower, but again, now head higher. But now it looks like we're setting up for a 3rd drive to a bottom down here where the bonds won't confirm at new lows. So it's all about interest rate pressure. Something else that you may want to take a look at and consider is that copper is acting better than the precious metals. Right now, to me, this just looks like a pullback, although these lows were confirmed, holding up much better with silver making new lows and gold pressing to new lows. I also think that the fact that gold so far held the 1680 level with what the yen is doing is constructive. Not a great looking day, so perhaps we're going to get that test of the 1680 level, but I lean more towards a higher low developing, especially if I'm right in silver. So you may want to consider something here around, say, the 1695 level and be out under 1680, because that would measure sharply lower. It's all about rates today, guys, and it's all about the ECB this week. Dixie making new highs right now as we're live, but as you can see on the 4-hour time frame, as we're making new highs, we're not confirming, only about 30 pips away. You know, normally this would be a Monday, but with the holiday, it's Tuesday. So be aware of reversals from tomorrow through the ECB, and don't anticipate them. Wait for a reversal candle, preferably a daily, minimally a 4-hour, but we're approaching levels where we're at extremes. I still think we have, and do know that we still have extreme shorts positions in the euro down here. And here we are again. We're going to retest this low on the 4-hour time frame, but I don't see us taking out 30 on the RSI. So this could be an inflection week in the euro, would make sense. Also, something to keep in mind when it comes to the dollar, something I learned today in an interview with Kirk Spano. When you think about it, you would think that the Democrats would be more bearish for the dollar, but the low in the dollar at 90 came in right around Biden's election, okay? All the way back down here was Biden's election. So actually the Democrats are more friendly for the dollar because it affects their constituency, and the Republicans are more bearish for the dollar. So as midterms approach, that could also be a factor if Republicans take control of Congress. Just a fundy to keep in mind, along with all the technicals. I would invite everyone to join us for what I think is going to be an impactful month in September, where you're going to get very good stock ideas from Mike Venezia. We also have some traders that come in here that were short the S&Ps last week, and the mastermind community is building. But again, I'm focused on what's happening here in silver. I think sentiment is about 11% bulls on silver. So we need a positive week for us to confirm the weekly divergence. Look at this divergence on the weekly compared to where it was back in July. It's pretty glaring to me. It still needs to prove itself. And I'll be back here tomorrow. And then I interview Adam Button on Thursday from Forex Live. Mike will be back with us tomorrow. And good hunting, everybody. Remember, anytime you go into the market, before you do so, know why, know where you're wrong. That's where your stop belongs and the contingency is negated. Also know what you're looking for if you're right. So you have a target and understand what kind of risk reward you have for assuming risk in the market. And above all, don't just count your pips, count your blessings. I'll see everyone tomorrow for an update. We'll see what kind of follow through we're getting in the dollar. We'll see if 110.40 ends this advance in the dollar. Good hunting, everyone. Dale Pinker from TradeGateHub.com, our sponsor, proudly